What is going on, YouTube? Good morning. It is your boy Chris. Welcome back to the channel. If you're new, welcome to the channel. Like always, hit the like button, smash subscribe, turn on your bell notifications so that way you get notified when I drop 2 vlogs a week. And on that note, it is Saturday morning. We're gonna get started. We're gonna go and make a coffee together with this beautiful little boy right here. We're all gonna get up right now and go and make a coffee together. So let's go do that. And then let's hit the charts, figure out how to make some money with you guys. All right.
Heading to Vegas in my blue stripe car. She's riding shotgun and she looks like a star. Yeah, she's got the style that makes you think she's made out of gold. She says she likes it better when we go off-road. Yeah. I'm gonna make it worth your while. I'm gonna make it worth your time. I'm gonna make it worth your while.
What's going on? Hope you guys enjoyed the intro. First and foremost, I want to apologize for not dropping this on Thursday. I had an absolutely crazy week and just wasn't as organized as I usually am, so I just didn't get to the chance to vlog. But we're gonna just do some analysis now based off of the weekly close, which is gonna work out a little bit better for you guys, I think, education wise. So first thing I look for is I'm gonna look at the monthly. I like to check it maybe once, twice a month, sometimes even just at the end of every week to see how it's behaving, especially on a month like this where we've had such huge moves. So we're gonna look at the bottom right of the screen over here. You'll see when I put my cursor over a candle, it's gonna show the open, high, low, and close of that candle. So I'm looking for the high right now, which is 1920.60. So again, it was the high of the candle. Just to be sure, is 1920.60. Okay, so we have to right click 1920.60, edit that. Even though it doesn't look like it's a big difference, it is. It's about 30 something pips off when we zoom in. So that's a key level that we obviously got rejected at on the monthly. We're going to go down to the weekly now. The weekly, we can't really see it because, oops, one too many. The weekly, so we see that resistance there, which was the previous all-time high historically for gold. We've now created a new one. We did not close below it this week. So that obviously the first thing that I'm going to think of when I see it not closing below this level and coming back below that resistance, or sorry, that support, which was resistance, is that there's going to be some sort of upper wick and then potentially another retest of that support level at the 1920, even maybe a little bit further. So let's go down to the daily now, see what levels we see. So we have this level here, which is the 1980. So we have 1989.3. So 1980 spot 93. I'm going to double click it. So if we see here, if you're new to MetaTrader, you'll see that the circle is there. You want to double click on that line to make sure that it does not move when you're dragging your mouse or you're clicking anywhere near that. Let's go down to the 4-hour now, draw some more key levels. So we have one here at the low 2009 spot 50. So that was pretty close, but again, we want to get it right on 2009 spot 50. Same thing again, double click. This one's a key one as well. 2015 spot 48. 2015 spot 48. We're also going to look up here in this area. So I like the wick off of this candle right here. High is 2047.92. Let's see how close we can get it. 2047. 2047.92. Alright, so that looks pretty good. So the reason why I chose this one is because we can obviously see that this was resistance here. We pulled back down, broke above it, used it as support, continued up, then we made a high of here, came back below it, came back up. So we know that when resistance becomes support, obviously we have to watch out for that. So resistance became support. It was used as support again here on this lower wick right here, but the lower wick ended up getting filled. We broke below it, used this previous support and resistance over here. Again, we bounced off of it. We're now going to expect a retracement back up to retest the previous support level and use it as a resistance once again to confirm that we are going to continue bearish. So we got that, continued down. We broke below this previous support, which now opens up the downside. So now we're looking at the downside. And before you guys comment everywhere, do not ask me what these exponential moving averages are that I use. Every single time frame is different. Every single time frame has a different exponential moving average, nor will I be sharing it on here. From there, we continued bearish. We broke through every single strong level imaginable that I don't think anyone was expecting to happen. I wasn't even expecting to have this big of a push that we did. I thought it was going to stop around the 1920 and then reverse back up from there and create a high somewhere around the 1980, but played out the way it was supposed to, so it is what it is. If we go down to the 1 hour now, we're sitting pretty much at my 1 hour EMA. What I'm expecting from here is, which I'll show you, we have nice higher lows created here. So we have, I don't always draw off of the lowest low. I draw off of what I see as relevant. So we have a low, we have a higher low, we have a higher low. If we go over here, price got squeezed down. From here, I'm expecting price to either come down and bounce off of this trend line and push up, or maybe even just gap up above this trend line and then continue upwards. But to think that it's going to be a sell from here isn't very realistic, just because we've been creating higher lows. So I wouldn't be looking for a sell position until we broke back below the 1920. Even if we don't have a push up, I wouldn't be looking for a sell until we break back below the 1920. Reason being is because I need this low and I need this low to become invalidated. If that does not happen, I'm going to continue looking for buys until there's some sort of strong resistance or sell signal. As of now, there was no strong resistance or sell signal in this area, so it was kind of just a consolidation. You can trade it on the lower time frames, which is what I did on Friday. I traded this off of the lower time frames and was able to take out, I think it was 268 pips on Friday, if I'm not mistaken. But overall, I do see this continuing upwards somewhere to between the 1980 and the 2009, 2015 area. So somewhere between this level right here and this level here, I think that we could have a push up to. We also have price trading in somewhat of a channel here as well, right? So look at the lower time frame. Go down to the 30-minute. 30-minute again is sitting below my EMA, but it's been chopping back and forth over it, so I'm not really biased either way at this point. Same thing with the 15-minute. We did break below it, came back up, retested it again, and failed. But again, the time frame's above that, the 30-minute, 1 hour. 4 hour, we haven't quite retested it. We came just shy of testing it. But again, I think that this level over here is holding very well based off of price action and based how strong these candles in here are before this continued push up. I think that what we have happen here is a push down. We had a strong pull away from this zone to not allow people who entered sells to get out of their position and profit or at break even. They're now in a drawdown or got stopped out. And also people that were selling this, the reason why an aggressive move like this happens is because the people that were selling on the way down took profit, right? Which means that the market has to pull back. Same thing as why there was this strong push up. We created new historical highs and then such a strong sell off, because at the same time that people are closing their positions and taking profit, right? All the way from there could have been people holding it from 1700, 1600, 1500, wherever, right? Or maybe even longer, long-term investors, stuff like that, banks, hedge funds, whatever the case is, are potentially holding profit all the way up. And the higher it gets, the riskier it becomes, because those trades now need to get filled when you close your position, right? There's always a person on the other side, not quote unquote a person, but there's always someone on the other side that's filling that trade. So at the same time that these people are selling all their positions and taking profit, there's people that are selling into that, which are filling those positions and pushing the market down. And then as those people start to close their positions, the market's going to retrace back up, right? Because people are now buying again. So vice versa, people are taking sells here, they're closing their positions and taking profit, so now people are buying those positions technically from them, you can say, which caused this aggressive push up and pull back. And it is what it is, whether they're long-term traders and expecting another push up, I don't know, I can't really predict that or say, but that's just how it essentially works. So from here, of course, again, like I said, I'm expecting, if these higher lows hold, I'm expecting a push up anywhere between the 1980 spot 9.3 to the 2009 spot 5 to the 2015 spot 4.8, and obviously looking for nice candle formations and candlestick patterns that are going to show that price is being exhausted up in this area, anywhere from here to here. Looking for sell entries and a potential pullback or continuation down on gold. It's been a crazy year so far. I knew that this week was going to be bearish for those people that follow market strip down Saturday and have access to that. They saw that I had called out. I only called out, I think, like a 600 to 800 pip push. I did not expect it to go 1300 pips or 1900 pips in total that it went. But it was the one day, I think it was Tuesday. Was it Tuesday, Friday, Thursday, Wednesday, Tuesday? Yeah, Tuesday was historically the biggest sell-off that there's ever been in gold. It was the biggest loss that gold's ever had. And historically, I'm 99.9% sure. I remember seeing that on an article. So I was not obviously expecting that. I was expecting about a 6 to, again, 800 pip push down, which we achieved. My entry point that I was looking for was around the 2054, which obviously we didn't get, but there was a strong resistance at the 2047.92, which was this low over there. So again, like I said, we broke support. Support now becomes resistance. Resistance holds. You're going to be looking for sell positions, so on and so forth. And it was a crazy week, to say the least. Lots of money to be made, lots of money to be lost if you're not doing it properly. I think that we have broken back. Again, support. Support was broken, came back up. We now used it as support again, so it was kind of like a fake out. And I think it was a way to trap people into sell positions, to make them think that this thing was just going to keep on dropping to, I don't know where. People thought maybe it was going to drop to like 1700, the rate that it was going, or back into the 1700s or 1800 or 1820 or whatever the case is. But this definitely trapped a lot of people in sell positions and brought us back into this zone up here. So now what I'm watching here is to see how it reacts here and see if it continues to push up and break these levels. If it breaks the 2015, then we're obviously going to head to the 2047 and potentially even retest that high at the historical high now, 2074.76, pretty much 2075. So we could, sorry for the train, we could potentially have a continued push back up to this level, but we would obviously have to break a lot of key levels. And obviously support over here could now potentially, that's why I'm thinking that it could potentially become resistance, right? So I think that we could push up and have a sell-off from here again, maybe back down to the 1878, maybe back down to the 1863. We don't really know. We have to play it out as it's happening. You don't really want to try to predict. You want to just react to what's going on. Predicting, you can make obviously more money than reacting, but the risk is obviously higher, right? So it just depends on how much you feel like risking, and what kind of exposure you feel like having in the market at the time, right? So I hope that this shared some insight. This is the way that I trade. I use my EMAs that I figured out for each time frame. I use candlestick pattern, support and resistance, very strong key areas that price breaks through and pulls back to, that it's obviously being manipulated in and out of. I hope this was informative to you. I hope it gave you some sort of insight as to how I trade gold and things that I look for. On that note, I wish you an awesome week ahead. I wish you an awesome weekend. I hope you had an awesome Saturday and an awesome Sunday tomorrow. Keep studying the markets. Keep improving and mastering your craft. I'm no special. Anybody that's successful in anything is no special than anyone else. They just obviously put in mass amounts of effort and work to master their craft and get to where they are. So you can achieve anything that you want to in the market. There's absolutely no limits to in the market or any other industry. The only limits that we have in life is the limits that we impose on ourselves and that our mind imposes on ourselves. So with that being said, I hope you enjoyed it. I hope it was informative. Please hit the like button if you liked it. Smash subscribe. Turn on your bell notifications so that way you get notified for the next vlog on Monday. And I will see you in a few days.